All right. Welcome, everybody. It is Wednesday, and we are about to go live from Invest in Education Academy. Now, this is one where we're telling everybody, don't panic. And you're going to understand why we're saying don't panic in just a moment. Definitely wanted to thank you all for being here. And as we jump into this, if you have questions or anything you want to share, if it's something that you've been curious about as it relates to the market, please let us know. And if you have a moment, if you can just tell us where you're coming in from, we would appreciate it. Are you normally watching us? Do you watch us like real-time live? Do you watch, if you're watching this, do a hashtag playback. If you're watching the playback, if you're listening to the podcast, go visit us at IEApodcast.com and leave a comment under the whatever the episode is you're listening to, so we can just start getting some feedback and see, what people want to hear, how much you want to hear, and where you're listening, so we can kind of cater to you all. So while Leon tells you why we chose the topic, don't panic, I will do some housekeeping.
Yeah, so well, at least in the IEA ecosystem, like myself, a lot of us are heavily in technology stocks, and tech has been getting wrecked. I mean, just annihilated the last really last 2 weeks, but really the last month. But the last 2 weeks have been really, really painful. The NASDAQ is down. So the NASDAQ composite, NASDAQ 100, it generally tracks tech stocks. So it tracks like tech stocks as a whole. And it's down 7% from its recent high. While at the same time, the S&P 500, which tracks the market in general, not just really tech stocks, is down only 4%. So if you imagine, we always say, individual stocks move, orders of magnitude more than the actual indexes. So, I mean, I know some of my stocks right now are down 40, 50, 60%. In the last 2 weeks alone, I have a bunch of portfolios, but my main stock portfolio is down, I think like between 5 and 7%, which is very painful. But every time it's been dropping, I've been buying a little more, of what I already have, and I've been adding to positions. But it's painful. This is what it is. We've been through this before. We went through this during COVID. Brent and I have been through this a million times. We've been in the market about 30 years. But I mean, we've been in this long, and it's still painful. There's nothing worse looking at your account and seeing it down 5, 6, 7%. But we know through our experience that this is actually healthy for the market. The market got ahead of itself. 2020, as we said last year, coming this year would not be the same as 2020. That was a once in a lifetime or once in a generation pandemic. The market reacted in almost once in a lifetime manner that it dropped the fastest in history and then it recovered the fastest in history. And we're up about between 60 and 80% off the March lows, straight up. I mean, the market was on a tear last year. This year we've been sideways to basically down now because we're down about 4%. But a lot of people in the IEA ecosystem have been, a little annoyed, a little perturbed, a little stressed about what's going on. So we said tonight we're just going to cover no real topic. We're just going to talk about the market in general, why this is happening, how you should handle it, and things to look out for going forward.
Yeah, and this is a great time to kind of cut your teeth. And if you ever heard that term, it just means to get experience under your belt. Pay attention to how you feel right now. You're probably thinking, like, what does that have to do with the market? Just tell me if the market's coming back or not. It has a lot to do with the market. Because when you can't control your emotions as it relates to the stock market, you make irrational decisions. This goes back to several points that you've probably heard us make. You've heard on shows, you've heard on podcasts, you've heard on YouTube. You have to know why you're investing, number one. If you know why you're investing, it helps you weather these storms. Also, you should know your time frame. If you listen to Leon and I on an ongoing basis, for the most part, we're looking 3 to 5 years, really 10 years or more in some of these investments. Really, it's a large part of our portfolio we'll probably have until we don't have the portfolio anymore, like
right,
well into retirement. So we don't worry about these things. And also we have enough experience to know that the market has been here since the 20s and is not going anywhere. Now, I will say this. I think the environment for the stock market is slightly different with the excitement generated from cryptocurrency. And I do feel like cryptocurrency is having a kind of an effect on the market that hasn't been accounted for ever in history. So slightly different, but I don't think it's actually going to be a lot of things in the cryptocurrency space that's going to make the stock market amazing. And right now, I think there's some confusion with people who are thinking, oh, fast money, let's go. It's similar to when the interest rates were effectively zero. And then all of a sudden the Fed raised rates. And then some of these corporate or larger institutional money plays were like, oh, well, we can pull out our institutional money because we can get a guaranteed 1.5%. And when you're investing billions, that really matters. But the thing was, they didn't have an alternative before then. Now you have all these retail investors running around thinking cryptocurrencies, get rich quick. Not saying you're wrong, but there will be a day of reckoning. So if you're in there and you're just chasing these ghosts and you think, okay, let me abandon the stock market to go to cryptocurrency, that is the wrong play in my mind. Again, the views on this show are solely those of Brent and Leon. It's not telling you what to do. We're not telling you you're wrong or right. Do your own research. But history has shown, which we're going to show today, that the market always takes some lumps, always. And in all situations, as it stands today, it has come back over time. Time is the greatest equalizer in stock market investing.
Yep. And I mean, and like we're saying, what's going on right now isn't new. And what's going on right now isn't even anything. I mean, all of us, well, not all of us, but I know a lot of people watching or listening just got into the stock market as COVID hit and they got it at the lows. So a lot of people have only seen basically a bull market when it goes up, right? This is the first kind of like correction or pullback that a lot of investors are seeing. And what's happening right now isn't even like anything. We're only down between 4 and 7% from the highs, right? What's considered quote unquote a correction in the market is 10%. And what's considered a bear market is 20%. Typically each year, the market will go down between 10, you usually get a correction and or a bear market at least once in a year. So right now we're at about, typically we use the S&P 500. Most people use the S&P 500 to measure this. So right now we're only down 4%, which means we could go down another 5% or another 16% to that 20%. We don't know, right? But there are going to be times when the market is going to drop significantly. Right now we're only down 4% for the general market, 7% for tech stocks. That is nothing. We can go down to 20% or more. Remember, COVID, we dropped 35% in 30 days. It was fastest in history. Now that was an anomaly, but the market dropping, 10, 20% is normal. So right now we're not down really much at all. So say all that to say that the pain you're feeling right now could get worse, right? Just saying it could get worse because we're only down 4 to 7%. Or, it could reverse tomorrow and go up. Who knows? But like Brent said earlier, check in on how you're feeling, right? Because like I said, Brent and I have been doing this almost 30 years. And my account being down 6% still hurts. Like I don't like seeing my account down that much, but I don't panic. In some ways I actually ignore it and I actually buy more when I can in these environments because I know, as this the chart we have up here shows, that through all the dips, I mean, this chart goes back to 1900, right? 1900s, World War II, credit crisis, Vietnam, all that. The market always takes its lumps and then, eventually comes back because that's what we say. The stock market is a gauge, a measure of the U.S. economy. Unless you think the U.S. economy is going to collapse tomorrow, you should have some of your investment dollars in the stock market because the U.S. economy is the largest in the world. If the U.S. economy failed, that means it's Armageddon at that point. So just we want everybody to take a deep breath, and also if you can buy some of the quality stocks that you own or buy some new quality stocks that you've been looking at in this environment because we are now seeing some significant discounts on some really, really high quality companies.
Yeah, and for anybody who's listening, thinking, "Oh, yeah, that's easy for you all to say," you have hundreds of thousands of dollars invested, you have millions of dollars across. No, that's not the story.
Not at all.
The same way we check our accounts and we're like, I'm a dad with 2 kids, I'm married, and we have a house and we have bills. So it's like,
right.
When I check the account, I'm thinking like, okay, how's this going to affect college? How's this going to affect, summer camp cost? All these things are very real. And I know the stress of it is like, sometimes I think you all believe Leon and I are impervious to the, effects of the market. We are not.
Not at all.
Not only that, the emotion of it is, this is where this moment right here, and this is why it's important to talk about this. This is where intellect fights emotion. And it's a battle for everybody. Everybody. If you're talking millionaires, if you're talking, people who are just getting started, it's the same fight. The only difference is some people have experienced not to let the emotion win. And so the reason Leon and I do these lives is to kind of help anybody who wants to listen to us take the edge off where they're thinking, maybe I'm in a silo and I have to liquidate my account tomorrow or everything is going to hell with a handbasket. It's not going to happen. And, again, I do think there is a factor, small though. I believe people think that, the cryptocurrency marketplace is the new stock market. It's not. It's something different. It's similar, but it's not the same. And the rules are not always the same. And so for those that don't get it and they're jumping in and they have no strategy, they're going to get hurt pretty bad. And they're going to come back to the stock market like, oh, home. And not only that, some of the technology that's being created in the cryptocurrency space is going to make some of these companies boom. I mean, it's some companies that are absolutely going to go on, as Leon says, a tear when they really start instituting some of the technologies that they're getting from the cryptocurrency space and also from the decentralization that's occurring in that ecosystem. Is going to allow some of these companies to break through borders otherwise they could not have broken through. So there's going to be a lot of bleed over of successful companies as a result of what's happening in the cryptocurrency space. And, we had our first IEA Crypto Bulls meeting Monday, which was a great meeting, by the way. So I think everybody, as a result of that meeting, opened up like at least 2 new accounts and bought like 3 cryptocurrencies that were mentioned in that phone call. Us included, right? Us included.
Right. Yep.
And so it was great. It was great to share. But in that conversation, I can see where some of the success from these cryptocurrencies company is going to make the stock market stronger. So, let's look at the chart, right?
Hey,
everybody, I always like to talk about the Great Depression.
Can you zoom in, make it bigger?
Oh, yeah.
Yeah, there you go.
Okay. So I always like to talk about the Great Depression. And the reason I like to talk about that is the primary, like the worst years of the Great Depression were between 1929 and really like 1932. That's when the market started to have, the recovery. Right around 1933 is you start to see the market go back towards positive territory. The reason why I like to talk about the Great Depression is it was right after the market went on this ridiculous tear from the 20s. And also, it's the only time in history the market went below its opening levels. The only time in history. It's never, ever happened again in the market. And the reason I like to point that out is we're talking about 70 years of the market being in existence. It has never gone under the place where it opened at. It's one time.
No. Man, the market's been around like 200 years, but that was the only time.
I mean, from the time it was being recorded, like, really go back to the 1600s to go to the market.
Yeah. Mm-hmm. Okay.
But, just from charting.
Yeah.
So,
right.
I mean, me, I want to jump into that history, but I'm like controlling myself. So, but as it relates, that's the only time in history that from 1900 the market went below its open rate. So it's a high probability it's never, ever happening. And the market just does one thing. It often hits these new highs within a 10-year period. Every 10-year period, it hits a high that it never had before. So just rest assured, when you feel the pain, it will pass. But the question is, do you have the ability to ride the rough waters? And then also, what type of money were you investing in the first place? We always talk about risk capital. And Leon, you want to tell them what risk capital is for people who are new to us?
Yeah, I mean, risk capital is money that you can risk, money that you can lose and not go broke, not become homeless. You can still buy food, you still send your kids to college. Risk capital is money that you can literally flush down the toilet and you would not miss it.
Yeah, we don't suggest flushing money down.
No, we don't suggest that. No,
but in that space,
I'm just saying.
For me and Leon, I think two things we talk about often is curious money and risk capital. Curious money is one step. Curious money you might actually just experiment with. Like you might see how many dollars it takes to clog a toilet. But curious money is like, look, I don't even expect to make anything. I'm just curious to see what's going to happen. That's the type of money you invest. It absolutely doesn't hurt you at all if you lose it. Risk capital is like, you have to make a decision. Like, is this where I want to risk it? Or do I want to risk it maybe on this real estate deal? That's risk capital is the money that you kind of are giving some consideration on. Where do I want to risk it? Curious money is like, oh, here you go. Let's see what happens. And Leon just told me a story before we started about a gentleman who had some, what I would absolutely consider curious money, like $100,000 worth. And he just threw it in investment just to see what was going to happen. Like no research, not familiar with it, just wanted to see what was going to happen. And it was a very interesting story. If you are a part of our community, maybe we'll share it in the community. But for now, just rest assured, the biggest thing you have to control is your emotions.
Right, and the main thing with this is, as that chart showed, is that since 1900, there have been a lot of dips, a lot of ups and downs. But again, the market comes back because, again, the market is a bet on the U.S. economy and U.S. business. And also think about this, though, right? Like the companies that you own, one, understand what you're buying. Like, never listen to Brent, never listen to me, never listen to anybody in IEA blindly. Never listen to anybody on TV. Listen, take the information in, but don't take any action on that alone. Actually do your research. But think about like today, the market got crushed today. Like everything, crypto got crushed, stocks got crushed. But think about what happened between today and yesterday, or today and 2 months ago, in the company that you own. Essentially nothing, right? Like the market is moving, the market is doing what it's doing, but the companies that you own, nothing has really changed unless they reported earnings and they had really bad earnings. But they reported earnings and everything was fine. And actually, the earnings were better. A quick example is Apple, right? Apple reported, I think 2 weeks ago, their best earnings, I think, in the history of the company. And the stock is down like 50% since then, right? And Apple is on the best footing it's ever been on, but the stock is down because the market in general is down. Apple will be fine. They're a $1 or $2 trillion company, but it's just because of the situation we're in right now with the market itself, kind of going through this temper tantrum of coming out of COVID, interest rates, all the money the Fed is spending. A lot of different issues right now are affecting the market. But if the fundamentals of your company have not changed, you should absolutely be buying more if you can in this environment. And that's what I've been doing, through this. So just know, like we said, just don't panic, take a deep breath, and understand. And there's also a good time to really understand what you own, because if you're questioning a stock that you bought and you're like, damn, what do they actually do? You're like, and they're down 50%. That was probably not the best buy because you don't understand the company. So that's why Brent always say, do your research, do your research, do your research.
Mm-hmm. So with that being said, we owe you 2 stock picks. So we will give you our stock picks. Before we do, I'm just doing a quick PSA. We have launched the IEA Crypto Bulls. We had our first meeting Monday. It was casual and awesome. So, we went around the room, we kind of told, what drew everybody to the place. The coolest part about the group to me, there are multimillionaires in the group, and then there are people who are just getting started in the industry. There are people who are just graduating from college. And then there are people who probably are looking to sell their companies and retire within the next couple of years. That's a great pool of people to have together because the questions and the offerings are so different. And so we haven't, and we said this week, we are not going to do hard marketing. So this is for those of you all who are really curious about this cryptocurrency space, and you're thinking, I want to know, but maybe some of you all are curious about the cryptocurrency space, and you want to learn more about the stock market, and you've been curious about investing in Education Academy for quite some time. This is even better opportunity for you, because Leon and I went, back to the lab, and we figured for anybody who joins the IEA Crypto Bulls, you will also get a membership. We're including a membership to Invest in Education Academy community level. So you actually get Investing in Education Academy's traditional platform and access to the IEA Crypto Bulls our masterminds, our group in the group chat. I mean, it's phenomenal. Like it's. I mean, I guess I'm biased because I'm in it, but I've learned about cryptos that I've gotten free crypto as a result of being in this group. I didn't even know about. I've
Real
learned
quick,
about.
there's both of us we're mining on our phones right now certain crypto that we learned we didn't even know about existed.
I know, I hit my app every day, and so we have a mining app. Did you know it was a mining app?
Yeah, I mean, it's mine. Yeah, it's mining.
So
mining.
we got a mining app as a result of somebody in the group from Florida posting that they just joined this mining platform. It's free. It's free, and every time you hit the button on your phone, you mine, and they give you free cryptocurrency for mining through your phone. I still don't fully understand how it even works, but it was like nothing to lose. I was like,
right, exactly, nothing to lose, right? Yep.
So I mean, it's things like that. It's a lot of really cool posts being put into the group chat that could really truly affect your future years to come. So, and I got to say this. This actually blew my mind. There is a member in the IEA Crypto Bulls that bought Bitcoin when it was $13 a coin. Can you believe that? $13 a coin, and they still own it.
And she had totally forgotten about it for years, and now today it's worth $50,000 plus.
Yes. I mean, just learning some of this stuff has just been awesome. Learning some of the platforms and just doing it in a really casual manner it's been real cool. So if you're interested in joining the IEA Crypto Bulls, I think we're up to 13 members right now. We said we're going to close the group when it hits between 20 and 30. And the next cohort that we do after this group closes, that cohort is going to be $300 a month. Right now, if you get in before we reach between 20 and 30, we haven't figured out exactly where we're going to cut off the group. But that our first cohort is at 13 people. We're going to tap out between 20 and 30, and it's $200 per month for as long as you want to be a member, and you will get access to the IEA platform to learn about stocks and other investments that we post in there. And all of the information you see here is located there. In addition to Leon and I go live in the community that you all never get really privy to, but we make sure we put some extra information inside the community. And yeah, it's going to be exciting times. And again, I hope as many of you all can take this route with us as you can. I don't think we have any stats, but like statistics that I can say this is factual. From what we know, as of the close of 2020, the average person inside the IEA Crypto Bulls, at least, I'm sorry, the IEA Panthers, like the average person probably did about 45 or more in the stock market throughout 2020. And some of those people were new investors. So that was awesome. But anyway, imagine getting a 45% bonus at work.
Right. And not doing too much for it. Just kind of, coming to the meeting, checking out IEA, talking to us. Yeah, it's been cool.
Yeah, I can't think of anybody who just came home and was like, they give me a 45% bonus. Like,
right.
You can do it. Just where do you keep your money? And if you keep your money right now, if you're keeping your money in the savings account, unless you are extremely wealthy, you're going to get crushed over the next couple of years to come. And I hate to say it that blunt, and I hope I'm wrong, but with the speed at which people are making money in other investments, again, I'm not even saying with us, but real estate, buying cruise ships, I don't know. Like, there's so many ways to make money right now. If your money's not working for you, you're losing. And I need to say it that way because hopefully we'll move somebody to action. Again, it doesn't even matter if it's with us. That's not why we do this. Like, we're making money from the stuff we're learning also. So we're in a good situation, but we just want you all to know nobody's paying us to be here. We don't even get a lot of clients from doing this. Like, this is really a labor of love because we don't want to blink. 5 years go by and people were like, I always wanted to do it, but I never was willing to invest in myself. We invest in a lot of things. You should be investing in yourself.
And also that point about the savings accounts. So anyone listening or watching, just go Google today's CPI, Consumer Price Index, came out today. inflation is running rampant. If your money is sitting in a savings account collecting on average 0.05% for the year, inflation is crushing your money. It was crushing your money before COVID. It's decimating it now because everything is up in price. Homes, the biggest one right now is lumber, and that's what's pushing home prices up so much because of the demand. Food prices are up, car prices are up. I mean, everything, milk prices are up. Everything is up right now. So if your money is sitting in a savings account, you're not in crypto, you're not in real estate, you're not in the stock market, you are getting crushed. So just Google CPI and you'll see for yourself the data that came out today.
And also, too, you can just, while you're there, check the national average for a savings account in the United States of America.
Yep.
Check the national average for a savings account in the United States of America.
Savings account interest rate.
Interest rate. We'll be here next Wednesday. I would love for you to come back and tell us what you found, because some people are going to get left, and some people are going to choose to move to action, and some people will think, oh, well, at least it's safe in a savings account.
No.
I'll pray for you. So, with that being said, let's go to our picks. So for me, I'm keeping it simple. I am choosing, well, really it's not simple. Toyota Motor Corp. The symbol is, where's the symbol? TM. Again, Toyota Motor Corp, the symbol is TM. It closed today at $153.52. I mean, everybody knows Toyota, so it's not a whole lot to say about Toyota. They own Subaru, Lexus, Daihatsu. This company, and I'm not even touching the deal with Tesla. Just looking at who they are, their market cap is $252 billion. They have one of the best production lines in the automotive industry. And from, most companies are going EV, like they're diving full in. Still to this day, I think the most purchased EV in the United States of America is the Corolla. Didn't know that. I would have said Prius. It's actually the Corolla. So they are way ahead when it comes to already having name recognition and also a service center that people trust. And that sounds simple, but it's not. A lot of people who are looking at electric vehicles, they're not so nervous about the initial purchase. A lot of them are scared about the maintenance or what's going to happen when I make this, when I buy this vehicle. And so the trust factor, and you can't quantify that. So I'm not even going to go into the analytics of it. I'm really just picking it because it just makes sense. Where we are in the changeover to the EV marketplace is going to allow people like Lucids and Xpeng and Neo. Tesla's going to grow. They're going to grow. Apple's getting into it. It's enough room. You're talking about less than 5% of the US population actually driving EV cars right now. There's a huge market share out here for anybody, any competition to share. But I think Toyota is going to be well placed. And if this, deal does go through with Tesla, that's just another win. But I'm not picking it for that reason.
All right. Yep. Good, solid pick. All right. So my pick is company named Fastenal. Ticker symbol is FAST. Fast. So IEA insiders and Panthers are aware of this name because we profiled this company inside the platform a couple weeks ago. So I'm just gonna read what they do. So Fastenal is an industrial and construction supply company. They distribute to industrial businesses through 2,200 branches throughout the United States, Canada, Mexico, Puerto Rico, and Europe, with 13 distribution centers. Fastenal resells industrial safety, construction supplies, and offers services, inventory management, manufacturing, and tool repair. Now, doesn't sound sexy, doesn't sound
necessary.
Yeah, right. That's what I'll say. So maybe two reasons I chose. One, so one of the reasons the stock market is going through this fits right now is because stocks that most of us that are watching are probably in are tech stocks. And those are growth stocks. And growth stocks typically in recovering economies, they kind of take a backseat to what they call value stocks or even infrastructure stocks. Because think about what's going on right now. We're coming out of a recession. We're coming out of COVID. And then Biden is pumping $2 trillion into infrastructure. So a ton of money is going to go to like steel companies, concrete companies, companies like Fastenal that distribute into those type of companies. All this money is being pumped into the U.S. infrastructure, not really tech infrastructure, but like roads, bridges, trains, railways, things like that. So industrial companies and construction companies are going to see a lot of money hit their pockets over the next 3 to 5 years. One, because the economy is basically rebuilding itself, coming out of a recession, and two, Biden's pumping $2+ trillion into building the infrastructure of America. So Fastenal's clients, they serve companies like the steel companies and construction companies and railroad companies. That's who they serve. So they're going to see a huge, well, they should see a huge windfall from the coming spending that's going to go into industrial companies. So again, Fastenal, FASD, not a sexy name, but it's a necessary name, as Brent said. And they're serving the industries right now that are being funded via the government, which are industrials, construction, things like that. So
and also, Leon, just one point. When you get companies like this, their money's pretty much guaranteed. It's
right.
Very few government funded roads that get abandoned. It doesn't happen. So yeah, this
Yeah.
great.
Yeah, I mean, yeah, almost think about like they have a super massive contract with the federal government, and we all know that's essentially guaranteed money. And so yeah, Fastenal, again, not sexy, but necessary. And these are the type of companies right now that are winning in the stock market, not necessarily the technology companies. Not saying that they won't win in the future, but right now, a lot of investors are putting their money towards where the economy is going right now, which is to rebuild its infrastructure. So a couple stats on them. So their average revenue growth over the last 3 years has been 8.8%, and their average profit growth over the last 3 years has been 15%. So solid growth. And this is even before all the money that's going to go into infrastructure via the Biden administration.
And they got the 2% dividend.
Yeah, just about to say, and they pay 2.15% dividend, right? So stock goes nowhere, you still make 2%. And then again, if it does appreciate, that 2% pads your gains. One other point I make is just to show kind of the strength of this. So the S&P 500, I said earlier, is down 4%. The Nasdaq is down 7%. Fastenal is only down 3%. So right now it's outperforming the stock market in general, and it's way outperforming tech stocks. And the reason is, again, because it's going to be, it's like backdoor being funded by the federal government through this coming wave of infrastructure spending. That's going to hit their pockets in the next couple of years.
Lee, before we go, I wanted to say to everybody, if you're interested in joining Invest in Education Academy, you can go to IEAnow.com. And also, if you're interested in joining the IEA Crypto Bulls, you can contact me and Leon directly, or you can go to IEACryptoBulls.com and you can kind of read about what we're doing. We only have 7 slots left. The way it's going now, maybe 13 slots, depending on where we stop it. But we already have 13 in and we're making money. So I hope you join us. But if you don't, it's okay. So we're going to go. We'll see you all next Wednesday. Again, everybody who checked on me, I saw some of the texts saying, I'm glad to see you up and moving around. Yes, I'm back. So yeah, definitely appreciate all the care and consideration you all showed during that time period. We will talk to you all next week, Wednesday. Have a good day.